What's good, everybody? Mokama Sunday service. Today we are talking about how to trade leap options, specifically my leap options trading strategy. I was reflecting this year on my trading in general, specifically in terms of what has made me the most money this year, and what has made me the most money has been my leap options. So let's get started. All right. This is my trading account, all of my accounts. I've been trading leaps inside of my retirement accounts. So the leaps that did really well for me this year. In fact, I only traded, I would say, three companies with leap options. Two of them are here. One I made, I think, $4,000 in two separate accounts, and my retirement, my wife retirement accounts. That was Apple. So I made $8,000 this year from Apple Leaps. My Google Leaps right now, they are up 3,800 bucks. This one's up 3,800 bucks. This one's up 3,600 bucks in three separate accounts, so almost 10 grand in my Google Leaps. And then my Shopify Leaps have gone crazy. Right now, my open profit and loss is $5,900 in this account, $5,900 in the second account. But I'm up over 10 grand because I scaled out of these leaps. I originally bought three of these, sold one up 25%, sold two up almost 90%, and then I kept a runner. Oops, what happened? Sorry. What did I do? Sorry about that. Kept a runner, and this one's up, I think, like 168% or something like that. So these leaps have done really well for me this year and have been the main reason for my account growth this year, to be honest. So I'm thinking actually about day trading way less, swing trading way less, maybe just doing one, maybe two a week, if that, on a really good setup with extreme exhaustion, and then more so using these long term leaps to really help me grow my account. If you look at the trade price too of the Google Leaps, I bought these at $59.30. So that's 5,900 bucks, right? But now they are worth 9,700. The Shopify Leaps I bought at 3,460 bucks, or $34.60. Remember, with options, these represent 100 shares, so the trade price you always have to multiply by 100. So this cost me 3,460 bucks per contract, and now they are worth $93.72. Right. So this has been like a damn. This might have been a 3x from my original purchase. At least on this last runner, it's almost at 3x. Right. The Shopify's been going crazy lately. That was my best trade. That was my trade of the year. Uh, so why trade leap options? Number one, if you are buying options versus selling them, and we've talked about this in previous videos, when you are buying options, there is always some time decay associated with the price. Meaning, if you are buying options with shorter expirations, let's say it expires this upcoming Friday or the Friday after, right? Every day that time goes by and the stock doesn't do what you want it to do, or it stays flat, you are still going to lose money on that option because there is time value associated. So generally, if you're buying options with shorter expirations, let's say you're buying a call, meaning you want the stock price to go up, the stock price doesn't just need to go up, it needs to go up fast. If you're buying puts, meaning you're betting on the stock price to go down, the stock price doesn't just need to go down, it needs to go down right now, fast, because there is time value associated with that option. When you are buying a leap, and a leap, to define a leap, is essentially just a long term option, an option that doesn't expire for like a year and a half. Some people may quantify it differently, like anything 6 months out. I tend to like to buy my leaps over a year and a half out. And those leaps, those options that have expiration dates a year from now or a year and a half from now, have less time decay associated with them, right? So most of the option you're buying, especially if you're buying in the money options, which is what I buy, like there's going to be way less time decay associated with the option that you're buying. It's going to be mostly intrinsic value, right? So here's an example. Specifically, I'm looking at Micron because Ange, this was one that was on his list, on Troy's list from EYL, right? So this is the one actually that I'm looking into buying a leap on after doing some research on his list. I think he had TSM on there, Nvidia, Micron, Kava, and then there were two others. And I think I don't remember the other two off the top of the head, but specifically in the semi sector, I love TSM as a stock, but long term, that's the one that I'm scared of because of the potential China Taiwan conflict. So I'm more scared of buying. I think it's an amazing company, but it's the geopolitical conflict as to why I don't like TSM that much. Number two, it didn't have a significant pullback. So I wouldn't be interested in buying a leap on TSM right now because the pullback isn't significant, if any, right? Nvidia, I wouldn't buy Nvidia right now for a leap because it hasn't had as significant of a pullback, like back to that 110 price, $100 price. That's probably where I would think about buying leaps on Nvidia. And personally, I wouldn't buy leaps on Nvidia because I already own 275 shares, so I'm already allocated there in that stock. Especially as a heavy weight of my portfolio. So I wouldn't buy leaps on Nvidia for that reason. Micron, on the other hand, looks decent. So this is the one we're going to evaluate for today, right? So Micron's current price, at least as of the close on Friday, was $101.17. So when we're talking about less time decay, what am I talking about? So if we look at an expiration date of December 20th, 2024, which is what, in 2 weeks approximately, right? This is OPEX, December, the third Friday of the month. And if we look at the time decay, which is represented as theta, I have a whole video on how to set up Thinkorswim and to set up your charts to make sure that you have Vega, Theta, Delta, Open Interest, whatever you want on your chart. So theta, as it's represented on my options chart, if you look here, for every day for, let's say, the 101 strike, or let's even take this 94 strike, right? 20 cents of this option is going to be time decay, which means if you buy this option, let's say the 94 strike, you buy the 94 strike that has that 20 cents of negative theta decay, and Micron stays at 101.17, you are going to lose 20 cents every single day, even if the stock price stays flat, right? So that's time decay. That's what I mean by time decay in an option. As you get closer to at the money, it's the same thing, right? So 24 cents is going to be gone if this price just stays the same and you buy this option right here at the 101 strike, right? So that's time decay. Now, if you buy a leap, so now we're looking at the January 16th, 2026. So this is a little over a year out, a year and a month out. Look at the theta. It is relatively low, right? So until we get to about 3 months out from expiration, the time decay on buying these options is going to be relatively low, right? So even if this stays flat for a while, you will be okay. You are not going to lose much money with time decay being 2 cents or 1 cent or whatever, right? Or 3 cents even. So this is one of the benefits to buying leaps, is that there is less time decay until you get closer to expiration. Number two, buying leaps is not as expensive as buying stock, so you can leverage your cash more. So if you wanted to buy 100 shares of Micron, that will cost you $10,000 right now, right? 100 times 101, right? So that's $10,000 that's going to cost you. 10,000 and some change. Versus if I wanted to buy a leap on Micron, remember uh, one option is representative of 100 shares, right? So I can control 100 shares by only putting up 3,400 bucks versus $10,000, which is a third of the price. So I might be able to control 300 shares with the same amount of money that I would need to buy 100 shares of Micron. So I could buy I could control 300 shares by buying three contracts, let's say at this 80 strike, and pay the same amount to control 100 shares if I bought the shares. So it's more leverage for your money, right? And so this is, I think, the primary benefit is that you can do more with your cash. And that's the primary reason why people buy options in general, because they're less expensive than buying the stock, right? And so you have more leverage. So how do you buy leap options, right? My rules, I'm looking for a 20% to a 50% pullback, ideally to an EMA like the 200 or a fib level, a really substantial fib level. Number two, because this isn't like a standard swing trade that I'm in for two days to 2 or 3 weeks, or a day trade that you might only be in for a few minutes or an hour, right? I need to make sure that that stock has good fundamentals, because this is more of a long-term play, right? And so when you're swing trading, who cares what the fundamentals look like? You just care more about price action, because you don't plan on holding that stock for any longer period of time. But if you're planning on holding something for a year, for more than 6 months, right? That means through 2 or 3 earnings announcements or earnings periods. It probably should be a company that you actually believe in, that you think is actually making money, that has good cash flow, right? That's in a sector that you think is going to be bigger in a year, that's going to get some help from the government, etc. Right? And then the other thing that I'm looking for is the liquidity at a particular strike price. Um, my liquidity rules for swing trading is I want to see open interest of over 1,000. But looking at the leaps and the availability, like on Micron and some of the others that are still, bigger names, not as big as like a Tesla or a Google or a Meta, but I want something with liquidity at least of like 500 open interest, so that if I go to scale out of my leap or sell it, that there's going to be a buyer on the other side. So be careful buying those leaps that only have 5 open interest or 10 open interest. That means there's only going to be 5 to 10 people willing to trade with you, even if the thing goes up. And so there's 2 outcomes to your leap. You could either hold it all the way through to expiration and get the shares, or you could sell it before expiration and just pocket the cash selling it. Right. So I think let me go back. Looking at my Shopify leap, Shopify right now, I think is at, let me check my phone. Where is it? Shopify is at, I think, over $100 right now. Shopify is at $118 right now. Oh, it's right here. Sorry. Right, it's $118.60. So I have the right to buy Shopify shares at $25, even though they are worth $118. So really my dilemma at this point with Shopify, with this last contract that I have in our IRA, I actually believe in Shopify. My bookstore is run on Shopify. We switched to it because we think it's the best online platform right now for e-commerce. That's just being real. And so that's what actually prompted me to buy this when it pulled back. But So I'm thinking like I have a dilemma right now, like a good dilemma. Do I sell these as we get closer to expiration, or do I buy 100 shares of Shopify for $25 when it's worth 4 or 5 times that right now? You know, so it's a good problem to have. And so that's really the thing that you need to decide too, especially as you're getting maybe 3 months into the expiration date. Should I cash out now, or do I want these converted into shares? Because if you hold them through expiration, that's what's going to happen, is you're going to end up with 100 shares in your account if you hold these past June 20th, 2025. All right. So those are my those are my three rules. I want a 20% to 50% pullback from the all-time high or a recent high, good fundamentals, and some liquidity in the options. So specifically looking at Micron, just with those particular factors, right? What is there? Has there been a 20% to a 50% pullback on Micron, and where should we potentially look to enter to buy a leap? All right, I'm gonna pull up my Thinkorswim. Can you guys see my screen?
Yeah.
All right, so let's go to a 5-year, week, or month chart, right? So first thing I'm gonna do is draw my fib levels on here. Take this Fibonacci retracements tool. I could be pronouncing it incorrectly, but I'm from Los Angeles, so whatever, you know. 31. I'm gonna take it from the low. Oh, actually, I should take it from the high. The high was 157.54. Right, take the tool, draw that to the low at 31.13. Right, if it's not exact, you can right click it, edit the properties, make sure it's exactly the price that you want it to be. Bam. Okay. I don't know if you guys were able to see that, but bam, right? So we have our high at 157.54. Our 5-year low is 31.13, right? So for me, what I'm looking for is this significantly discounted from the high? And it is. It is close to a 50% discount, right? If you're looking at this all-time high, which was in June of 2023, or maybe it was 2024. Actually, no, that was June 2024, not too long ago. So you had an all-time high at 154.54, and now we're at a 50% pullback from there, right? So is this at a discount? Is it a good value? Yes, it's more than 20 to 50% off, right? So I like it for that particular reason. Now let me switch to a day chart. I usually like to start off wide and then zoom in to figure out what it's doing. Is it close to that 200? It is. It's underneath it, but it is close to the 200. I would like it to get over and then maybe pull back to it instead of being underneath it. But hey, this looks pretty good, especially here. If it breaks out, look at this level right there. Really with like technicals, I'm just looking for as the price, it looks like the price, like that's going to be a ceiling. So if it breaks out above like 104 and then comes back, or if you're a breakout trader taking it on this breakout, if it cracks 104 or 105, like doing a leap on Micron, and then it has all of this room to move up to 157, right? So that's number one. Is it discounted? Yes. And then I want to be this entire time, I want to compare it to another semiconductor stock, which is Intel, right? Micron makes like these RAM chips and a lot of solid state drives, right? And it's been pushed up it's in the AI sector too, right? It makes semiconductors. Intel is very similar, makes semiconductors for chips. But if you look at Intel is at a more significant pullback, but for me, it looks way worse. Like, yes, this is more than 50% discounted if you just look at it from a 5-year level, but like, I don't want it to be that bad. For me, this is a signal that Intel, and I think they just fired their CEO too. If we draw the fib levels here, yes, Intel is really cheap, but why is it cheap? Intel's at an all-time low. But for me, this looks like something that could go into bankruptcy, right? It's losing a lot of money if you know anything about its fundamentals. Let me draw the high properly, 69.29. But it doesn't really matter, right? So high here, 5-year high. It looks like a stock whose best days are behind it, if you ask me. Because I don't want to see a chart that looks like this. I want to see this reversed. I want to see the stock start here and then go all the way up and to the right. So technically speaking, yes, Intel has pulled back significantly. It's significantly discounted. It's at a 5-year low, damn near. But I don't. This looks like something that could not be here in 5 years. We might be talking about Intel like a what was one of those banks that crashed? Bear Stearns and stuff like that. I feel like Intel could be Bear Stearns in a couple of years if it doesn't get its act together. So that's kind of comparing the two. Now let's go back to our other factor, the fundamentals, right? So I pulled up their recent earnings reports. And so let's look at Micron's fundamentals. Like you could do a deep dive, go into their specific government filings. You could really go and I think it was like close to 100 pages. You could read all 100 pages and really figure out if this is a company that you like over the next, year, 5 years, etc. Right? So for me, I like that they beat their expectations and they're growing revenue, right? So they reported 7.75 billion in revenue versus 6.81 for the prior quarter of the year before, right? They are profitable. They're making close to $1 billion in net profit, right? Looking at their revenue growth from the year prior. I did look at their 2022 revenue, which is actually higher than this year's, but their revenue is growing, right? They had 15.54 billion the prior year. Now they're up 10 billion this year because of the AI race and the AI sector, right? So they look pretty good, right? They're growing 93% year over year right now. Their margins are getting better from 26.9% to 35%, right? Which is something that I like. And I think we're going to need more RAM in the future. If you know anything about RAM for your computers, for all of the gadgets, for Facebook's Meta's new glasses, for all of the AR, augmented reality stuff, I don't think we're going to need less RAM and less solid state drives. I think, in fact, that's going to go up. So I like the sector that they're in and I like what they're doing. Now let's contrast that with Intel. Intel's revenue is down 6% year over year. Its gross margin is down 27.8% year over year. Its earnings per share is negative and down year over year, right? And I believe they just fired this guy, their CEO. Hold on, let me confirm so that I'm not slandering anybody. CEO. No, I'm sorry. He didn't get fired. He resigned. So, because people didn't like what he was doing. So I'm sorry. I apologize. I correct that on the record. He didn't get fired. He abruptly resigned about 6 days or 5 or 6 days ago because he was doing a terrible job. Personally, right? Their numbers are down consistently. So this guy is no longer here. So I don't really like Intel and where it's at. Like, they look like they could be headed for bankruptcy, personally, right? And all they're talking about is damage control. They're not the semiconductor industry. Like, when you look at Nvidia, that's been going gangbusters, right? They're making money hand over fist, and we have something in the same industry doing very poorly. So even though it's down, I wouldn't think about buying a leap on Intel right now. All right. So then our last factor was liquidity, right? That was our last factor. So now we already we can rule out Intel. We're not buying Intel leaps, right? At least I'm not buying Intel leaps. I'm looking for the trade, or looking at the trade tab. Um, then looking at the leap. So first, you're gonna see the option chain is gonna look like this, right? If you click this arrow down, usually it comes unclicked, right? You're gonna see the option chain. I want to go at least a year out, maybe a year and a half out, right? So a year out is January 16th. And really what I'm looking for is I want to go find the liquidity. So let's say I want to go a year and a half out to June 18, 2026. And let me see if I can get more strikes or all the strikes. I don't see much liquidity a year and a half out, except like at the money, and that's even kind of low for me. And I usually like to be deeper in the money, because the deeper in the money you are, the more this value is intrinsic value rather than time value as well. So I usually like to be a little deeper in the money for my options. They are more expensive, but they're more valuable. So I don't like June 18th. Let's go out even further. Let's go out 2 years. Interesting. This one right here would be a candidate. And this is the first time me looking at this one. So 2 years out, this 90 strike has 793 open interest. So this would be a candidate right here. This is 2 years out. Or 1 year out, I see the January 16, 2026. I'd like the 80 strike here, right? And you'll see the different price values. So for the 80 strike in January 16, 2026, that has 885 open interest, then the price would be 3,455. If you're using limit orders, however, what you could do, I wouldn't, and we've talked about like execution, I would not try to buy this for 3,455. I would try to get somewhere between the bid and the ask. And the last price that this was sold for was 3,270. So that is what I would put in as my limit order, would be around this price, to see if I could get filled somewhere between the bid and the ask price, right? So that would be for the January 16th leap, so around $3,200 to buy one contract. And then if we look at the December 18th, 2026, which is about 2 years from now, looking at the 95, that would cost you, this is weird why the last price was more. I would try to get a fill somewhere around $3,100. And it's a little less expensive because we're we're in the money, but we're not as deep in the money, right? This delta is 70, and on the, where are we at? The December 19th, 2025, the one that we were looking at, where was it? Was this the leap we were looking at? Why does it say 1900? This one right here. Maybe we were looking at a different strike, but I like this one too. That has 1900. This one, it has an 82 delta, so that's why this leap is going to be more expensive. Oh, that's because we were looking at the January 16th leap. That's what it was. That had 800, right? This one also has a 79 delta, which means that it's going to be a little bit more expensive than the leap that we're looking at 2 years out, because the delta isn't as deep in the money as these others are, right? So if we go deeper in the money, we wouldn't buy these because there isn't enough open interest. But you see, as you get deeper in the money, the options become more expensive. But it's because there's more intrinsic value, and there's a higher probability that these are going to remain in the money, and they're going to move more one-to-one. Not exactly one-to-one with the stock, but more likely one-to-one with the stock, rather than those that are closer to being at the money or out of the money. All right. And actually, before we leave Thinkorswim, so then where would I think about buying Micron, right? And I kind of already addressed this. Like for me, I like exhaustion, but I like the way that it's basing up right here, right? It's been consolidating. So if I were looking to buy Micron at a particular price, for me, I would love it at this fib level right here, or if it breaks maybe this 200 and all of these other moving averages, right? So my yellow is my 200, the blue is my 50, the orange is my 34, and my green is my 21. If it breaks these and like breaks this high and probably pulls back to that level, so around like 102 or 103, that's probably where I would look to get into to Micron, right? I want to see the momentum keep going up, right? I want to see this high. This is its most recent high. I want to see this most recent high get broken to see that Micron has the momentum to kind of keep climbing, um, right? I do like the fact we had a low right here and we had a higher low, and it looks like we have another higher low, so it does look like the trend is changing on it. But I want to see a trend confirmation. I want to see it break this level right there, at least that 105, and keep going, and then maybe grab it on a pullback. That's where I would look to buy Micron leaps. Um, or alternatively, if it can get back down to like $95 to that 50% fib level. What I mean by 50% right there, which means it's like 50% off the all-time high over the last 5 years. If they could get back down to 95, so like that's just a way of how I would think about buying a leap on Micron. Is I would love it if it got back down here to this low, or if it breaks that this area right here 105 and pulls back, I would think about buying it there too, right? Because then the trend is reversing. And really, even this high, maybe even if it gets to like 107, if it breaks 107 and then comes back, then it looks like Micron is trending up. Semis have also been down as a sector, which is for a long-term trade is probably better. But look, for me, I just look at like what's my risk reward, right? So if you buying it here at this 50% level, you have all of this to climb up to an area that it's been before, right? So not from $95 up to 157, that would be an amazing trade, right? So I would try to buy like 3 of these. I would try to buy 3 contracts, maybe scale out at this level, scale out at this level, and then keep a runner ideally in an ideal world where maybe I get out right here or just let it run, you know. That would be my game plan on trying to buy leaps if I were to grab it at 95. If I were to grab it closer to this 200, I would probably have a different scale out. I would probably try to grab it around here, and then my first scale out would probably be around 115, where these highs are right there, which is going to serve as some resistance. Maybe a second scale out at 130, and then keep a runner to ideally get up to this all-time high. All right. That's how I would play it personally. All right. So, with that being said, we kind of that like talked about leaps. Just a summary: how to buy leaps. Wait for a pullback. Make sure the stock has good fundamentals because you're buying it long term, so that matters. And then go look for an expiration date and a strike price that has some liquidity. And so now let's talk about weekly stock picks if you are swing trading, right? And as far as this entire podcast, YouTube episode, right? My disclaimer, this is for informational purposes only. This is how I am trading. I'm a lawyer that happens to trade in his spare time. And a lot of these trades are risky. You're risking your capital in every single trade and every single investment. So you should do this in conjunction with any financial advisor that you may have, and do your research independently, because trading can lose money, and it does frequently. So Do so at your own peril. What I'm looking at, koifin.com. I'm just looking at the sectors. I usually look at a 30-day time horizon, and I'm looking at what's hot. XLY is still hot, so XLY is primarily composed of Tesla and Amazon. Those are the two most heavily weighted, so that's what I would be looking for pullbacks on. KRE, the regional banks, I've been looking at this for the last couple of weeks, haven't been able to get a significant pullback because, as you see, it's kind of been flat, hasn't pulled back exactly where I wanted it to. So I'm still looking at KRE. XLC, the most heavily weighted names in there are Google and Meta. Google actually isn't doing that well. That's more been flat in a range. So I haven't really been trading Google, even though I own some leaps in Google. But in terms of shorter term trading, I like Disney and XLC. Meta, I even think has been looking better, but we'll look at that. And T-Mobile, AT&T. I think AT&T looked a little bit better, but I'll check on that as well. And then XLF, the big banks, even though I had a trade that went bad last week because it kept pulling back. But even so, this is still trending. So if it pulls back again, I would think about hopping back in XLF. And then the last one on the list is XLK. Apple's looking really good for a trade right now. And I think a couple of others. I think it was Cisco and IBM I've been looking at. And then I'm currently in an XLI trade right now that is doing so-so. I think I'm down 2%, nothing amazing. I got a 25% stop loss. So that one has been sideways from when I grabbed it. And that's what I'm currently in at the moment. And am I in a JP? Oh, and I am still in a JP Morgan trade and represented inside of XLF. That's up like 50-60% right now that I sold with a put spread. So just looking at Think or Swim. And for this, what I like to do is my flexible grid, looking at each of these sectors one by one. XLY, I don't do that much with XLY because it's really heavily weighted Tesla and Amazon. So I know if I'm looking at XLY specifically, which is consumer discretionary, the ETF, I like XLY itself. Look at how that's been trending up nicely, making new highs. So waiting for a pullback on that one. That's a potential swing trade next week if it is liquid in the option chain, right? So if we go to the option chain from December 20th, let me take some of these strikes down. Maybe not. I don't like XLY because look at the difference in this and the price of the bid and the ask. That's too big of a difference. I usually like there only to be a 10% distance. So like if this is priced at $5.85, I wouldn't want to see more than like a 58-cent difference between these two prices, and this is damn near $3. So XLY is off the list for next week unless there is a better strike somewhere else or a better no. So I like XLY if you trade shares, trade the shares, but as it relates to the options, I would probably prefer to see a different vehicle. Like Amazon looks amazing. Look, making new highs. So Amazon is typically always liquid because it's so huge. You could trade any number of these strikes. So Amazon is definitely on the list next week. Tesla, I think, looks good too. The only thing about Tesla, though, is how volatile it is. Tesla also looks good, but it's usually more expensive to buy Tesla. So if you don't have a big account, you might have to trade Tesla with the spread, and Tesla is more volatile. So I would trade Amazon over Tesla. I would prefer an Amazon trade over a Tesla trade on XLY. Looking at KRE, I still like KRE, still making kind of new highs. It pulled back, but it's not making a new low. The trend reverses for me if KRE breaks this low right here. It hasn't broke this low. It's still kind of trending upwards. So I still would like a KRE trade, which is the regional banks. There's some liquidity here. You know what, though? I have to take back some of this. I know Thinkorswim is doing some maintenance right now. So these could be off. Like when the market actually is open, the difference between the bid and the spread might actually come closer together. So I'll reserve judgment until the market opens, but I would like a KRE trade. There's some liquidity here because generally I don't see this much liquidity, like 28,000, and then have such a difference in the bid and the ask. So it might just be the platform right now. Let's go a little further out. No, that December 20th is looking like where all the liquidity is on OPEX, but just be careful with the spread right here, right? So that's KRE. The other sector that was hot was XLC. For that, let's do the flexible grid. All right, this is what I was saying. Google is kind of coming up, but this is a high that it hasn't broken. So I wouldn't think about trading Google until it breaks this high at like 182-ish, right? Meta looks good, but Meta is usually really expensive, so you would have to probably trade that with a spread, which you can't do in a cash account. Netflix, same thing, looks really good. You would have to trade that with the spread. T-Mobile actually looks good still. Disney, I want to see it finally break that high. Disney's been flat, but it has made some new highs. I still like Disney. Look at that curve on the EMA showing a good trend, and it's consolidating. So if Disney does pull back a little bit, I still am trying to get into Disney. And AT&T still looks good. I think I had been looking at the liquidity in AT&T and Disney and liked the liquidity there. That's why those are the top two of my chart. And the options are more affordable versus buying Meta and Netflix options, which are really expensive. Right. So those are on my list. If we look at the financial sector, which is XLF, JP Morgan, XLF itself still looks good. Bank of America, like some of these are choppy. This, like XLF had a bad week, but it's still trending. So trying to find a strength. I like Citi. MasterCard is more in the range. Visa looks like it's more in the range. So XLF might be cooling off a little bit. American Express is still in the range. XLF is cooling off a little bit, but I think I like JP Morgan. Is probably best in class right here. I still like Bank of America too, especially if it comes down to one of these lows. I still like Bank of America. So I still like XLF. It is still trending up. It's making newer highs. It's just kind of in a lull right now, but hopefully it bounces back up. And then at the very least, you could swing it down from one of these levels here back up here on a significant down day. But overall, XLF still looks like it's pretty decent to trade. What else were we looking at? So it was XLY, KRE, XLC, XLF. Oh, XLK. Tech is finally starting to make a move. XLK itself as a sector is really good, and usually XLK has significant liquidity, which it does. Yeah. Looking at the spread, I'm almost certain that this could be the platform right now. Not updating, because XLK usually has a ton of liquidity. Look at Apple. Apple looks really good, which I was looking for this on Friday, but it didn't pull back, so I'm looking for a pullback on Apple. Nvidia, not so much. Nvidia's been sideways. Microsoft might be starting the trend, but still I want to see that kind of start breaking these levels a little bit higher, because Microsoft has been in a lull. AVGO looks terrible or sideways. AMD looks absolutely garbage right now. CRM has been the hottest thing in the world lately after reported earnings, so CRM looks good. Cisco looks good. I think CRM might have been expensive or not having any liquidity, and IBM looked really good too. So those are some names that I'll just be looking at, but specifically the top three that I already had alerts on: Apple, Cisco, and IBM are probably my top three in the sector. And I don't know why CRM wasn't. It may have been because it was like a day or two after earnings, and I think the options, because of the price, is more expensive. And then the last one The trade that I'm in is XLI. I wouldn't necessarily even put that on the radar just because there are a lot more hotter sectors. There are 3 or 4 more sectors that are more hot. But that's what I'll be looking at next week for a trade. But candidly, I am doing less trading and trying to do more long-term investing, which is why this video was about leaps, because I think I'm going to actually reduce the amount of trades and look for more extreme pullbacks that are like closer to first or second standard deviations, like past the ATR, so that it's more likely that the trade's going to be profitable. And then maybe just doing less trades, taking a little bit more size. That's kind of what I'm thinking of doing. But that's what I will be swinging or looking to swing next week on pullbacks. All right, that is it for today. Does anybody have any questions, comments, concerns, something you want to look at?
Not on this end, man.
Right. But you feel me how I trade leaps though, and like why, and how I would, kind of parse that stuff. The other one that I would think about if I wasn't already in a Google trade is, how I would believe in Google. Um, if Google got back down to that 200, I would love it. If we're talking, if we're talking about leaps.
Yeah, that's a good one. I like bringing forth the fact that like only just makes sense to look at the fundamentals because you're going to be in it for, like, say, being into 2 to 3 earning calls,
Yeah.
earning periods. So
So
that was a
you
good thought. I never thought about that.
so you need to make sure it's a good company.
Yeah,
Versus if you're just in a standard trade for a couple of weeks, like who cares?
yeah, you should be out before.
Yeah. Yeah, I'm definitely
Yeah,
going to be out before earnings. Yeah. So,
yeah.
um,
Um,
but just looking at, I don't know, I have all this stuff on my chart.
I, when you set up when you're looking at sectors, how do you say where you have like all the individual companies
Okay, so
in
if I
that?
if I have a flexible grid, right, you can, if you do your flexible grid, there are many ways where you can like add. I think I went over this in my Thinkorswim tutorial, but you can add because I took off. There's usually plus signs that where you can add different screens next to it, to the right, to the bottom, to the left, right.
Uh,
So you can build a screen that looks this way. I could do a video on it of like how to do the flexible grid. Mine is customized right now. I know I even looked at a tutorial on how to take the plus signs off because they were bothering me. But I know like there's something in the menu where you can start adding these different screens. They use if you've never done a screen like this, then yours is going to come with the plus signs where you can put up to 10 screens or however many screens that you want, right? And so you can look at an entire sector at once. So, and then when you do that, and then you put each of the stocks in, then you can go and save it, right? So, anytime I want to pull up this sector, if I put all of these in there, then I can go save flexible grid as and name it. And then,
oh, okay.
when I name it, then now when I want to pull it up, it's going to come in here. And so for me, I have all the sectors. If I want to look at energy, I go look at energy. So it's a shortcut. If I want to go look at consumer staples, I go look at consumer staples,
Smart. Yeah.
right? If I want to look at tech or semis, I go look at semis, right? So yeah, it's a shortcut. So I can go look at an entire sector at once and see how the whole sector's doing.
Yeah.
Um, but yeah, that's how I do the flexible grid. And then a lot of these are just tools and things that I've purchased. Which is what we talked about earlier before we started the Zoom. Like I purchased tools to kind of help me see what the market is doing a lot faster,
Yeah.
rather than looking at every single one of these stocks, figuring out if it's trending or not. Like the tools to tell me if it's in trend or not. You know. And I know how to recognize just from looking at something if it's in trend. Like, is it breaking? I'm just looking at, hey, is it breaking new highs, and is it breaking new lows, right? If it's breaking new lows, like this one right here, like this one is trending downward. If it's bouncing off of these EMAs, and then coming down, it's trending down. If it's bouncing up off the EMAs, it's trending up. You know.
Mm-hmm.
But yeah, multi-sector charts, and oh, and if you trying to figure out what is in the sector, so let's say SMH. I know this is the primary ETF that people trade for semis, right? So if you're looking at the semi sector, what I would do is go online, type in Google SMH Holdings, which is why I believe in Google, because I use it 24 times a day, and go look at the holdings, right? Where is it? I hate this one. Usually they have a tab. Let me go look at. Where is it? This isn't as great as some of the other ones that just tell you exactly what's in it. Where are the holdings? There they are. If you scroll down, you just Google the ETF, right? It'll tell you the holdings and the weighting inside. So NVIDIA, TSM are the most heavily weighted inside SMH. So if NVIDIA has a really good day, SMH is probably going to have a good day unless everything else holds it down, right?
Yeah.
If Nvidia and TSM have a really good day, then SMH is going to have a good day. If SMH has a bad day, Nvidia and TSM are probably going to have a bad day, right? So they're just like just
Mm-hmm.
understanding what's connected. So I'll take all of these names: Nvidia, TSM, AVGO, AMD, ASML, Qualcomm, Texas Instruments, Micron, AMAT, right? And those are the stocks. And these change from time to time, so you have to update these as well because these ETFs every so often will rotate names in and out depending on how they are performing, right? So
Mm-hmm.
and weight them a little bit differently. But then I go put those names here, all those names that you just saw, SMH. I'll put the most heavily weighted first, the second heavily weighted second. Then usually I just go down the list, right? And make sure that they're all there. And these are changed a little bit, like I should reorient them, but I usually just make sure like the first like top three heavily weighted are the first three things that I see. Same
Yeah.
thing. And that's how I go figure out what's in the sector. I go figure out what it holds. And the same thing for XLF. And then that's a good way of seeing how the entire sector is doing. So here I can see the entire financial sector is trending. The one thing that I am missing on here is Berkshire Hathaway because it's like the options. I don't even know if they have options on Berkshire. The stock is just crazy expensive, so it's just hard to trade Berkshire unless you're buying stock. So, but look at the whole sector. The whole sector is green. So that's the one that I'm willing to take a chance on, even though I had a losing trade on it last week. I was in a winning trade. I'm still in a winning trade on JP Morgan, but I had a losing XLF trade last week. But I'm still willing to take this trade because I just look at the whole sector. I just showed you a bunch of different sectors, and none of them look as green as this sector. So this is what's green right now. So this is where I'm trying to trade if I'm going to swing anything,
Mm-hmm.
right? So it's just a good way of visual representation of looking at everything in the sector. Righteous?
Yeah.
Right?
Absolutely.
Anything else? Anything you want to look at?
Now's the time to execute.
All right. Yep, that's it. Mo commas, Sunday service, making it rain without the umbrellas. We here every Sunday morning, 8 a.m. Just trying to teach everybody how to understand the market better so that you don't need to pay a stockbroker who's going to steal from you. Because they would. I would go on that rant too. Look, a lot of these stockbrokers out there are just salespeople. And it's easy to buy and sell stocks. Everyone tries to tell you that it's fucking hard. Like a lot of them are just fucking throwing darts at the board or taking information that's coming from on high. And it's because they get a commission. A lot of them get a commission for every buy and sell that you make. So like it doesn't matter if you do good or poorly, they're going to make money because they're getting a commission off of every single transaction. When you are buying and selling stocks, this platform and most platforms don't even take commissions anymore. That's not true with options. You will get charged for options, but it's better than having someone take 2% of your earnings when you buy and when you sell. So if the market goes up 8%, that means your stockbroker is getting 4%. So it's important to fucking learn how to buy and sell yourself. Even if you're just doing long-term investment stuff, you're not trading options, because a broker will cost you money in the long term. Yeah. All right. Peace. Y'all have a good weekend.
All right, man.
Yeah. Deuces.
Appreciate you as always.